Uh, well, when I got a call about doing this, I sort of thought that I knew exactly where it was going to go. And the more I started to look at it, the more I realized I didn't. And I guess the question that we had was, when will the bubble burst? Will the bubble burst? Or the sequel to that could be something that I started to think the first time I went to China in 1993, which was, does Field of Dreams development work? Can you just build something and they will come? I went to the Sanya airport in Hainan. There was one flight a week, but they'd still built a fully modern airport. Now they're building 70 new airports and replacing that one in Kunming and everyone else. And all of those things I thought would never happen seem to always happen. So it's a whole different world, you know? So I try to do it from two different things. One of the things that is going to lean on a little bit with this issue of Field of Dreams, though, is the fact that goes a little bit to the SOEs, a little bit to the nature of the economic system, which is that for some reason the developers or the government doesn't relate to what we would call negative arbitrage here, of putting a lot of money into a project and having it sit there and not make money for years and collect debt. And I think that, I guess it's an advantage to their system, but I think in the end it's going to be a disadvantage to the people. The issues that come up with this are urbanization and demographics. Obviously now you're dealing with 53% of the people in China have gone into cities and urbanized. Only 27% have a hukou. Your geography that goes with that is very important. The employment and the transportation are very important. The other thing that I think is a big issue is to create demographically appropriate markets. What set me back a little bit in looking at this was I thought from the number of houses that we've sold to speculators and in the marketplace that I was going to be talking about Beijing, Shanghai, Guangzhou. Guangzhou is the most expensive housing market in the country now. Shenzhen, Tianjin. And what I found out is the 50 most dangerous housing markets and real estate markets in China are in places you never heard of. And they are in second, third, fourth tier cities that are just really where people built things that probably either should never have happened, were overpriced, or weren't near employment centers. Recently, there's a group called the Institute for New Economic Thinking. A fellow named Robert Johnson. They were visiting with the central government in Beijing, and they found out that Beijing has just turned back on all of the steel mills that had been in a slowdown because of the lack of demand for steel. And the reason they gave is they said, if we don't make steel and aluminum, they can't build buildings. If you can't do that, we're going to have construction unemployment. And if we have massive unemployment, no matter what it means, we're going to have social unrest. So you're not building buildings or housing necessarily all the time because people need housing. You're building buildings sometimes because of GDP. And I think that sort of touches on some of the other issues that have come up here today. If you look at this chart, what you're going to see is that the highest growth in GDP is in the poorest areas in China. It's going to be Anhui, it's going to be Guizhou, it's going to be provinces that are really beautiful places but very poor. You're also seeing the highest amount of land sales being predicted to go into those same places, which means they're looking for construction, which means they're looking for employment, which means the towns also need the money. I tried to create this chart. I'm not an economist, but I think I can try to walk you through it, and maybe somebody else can tell me how to do it better. It goes a little bit to one of the other concepts we had today, which is that land sales are the main support of municipal finance right now. And if you look at that, in order to keep the GDP up, the towns have to sell the land. And then they have to create construction and manufacturing. And what they're ending up doing is the GDP is producing a series of surplus inventory in every market, inflation, and municipal debt. And the only other source of money on these are the transaction taxes, and then the municipal services, because there's no real estate tax or other taxes to go with it. They don't have any way of doing it, of keeping up with it without selling more land. So it's sort of a never-ending process. Terms of demographic indicators, we had vacant office and overbuilt space. And I'm going to hit through these really quickly then. I was very surprised in this as well. I talked to Cushman and Wakefield. I thought that there was going to be a disaster in the Chinese, in the type A office market. If you look at Beijing, Shanghai, and Guangzhou, they're actually quite healthy. You know, Shenzhen is a little behind and has a little higher vacancy rate, but it's predictable it's going to be absorbed. Chengdu, which is just developing, is the only one, and that's because it's developing and there are a lot of people moving there anyway. The other side of that coin, this is 50 million square feet being built 80 miles from in Tianjin from Beijing with no tenants of office space. That's the new Wall Street. The buildings are even designed, a number of them, to look like Wall Street buildings. And why, when they've just finished getting Financial Street inside Beijing on its feet, why you're building 50 million square feet in the middle of nowhere is a little confusing. One of the things that I've always said is that the most dangerous thing in Chinese housing is speculation. And it's the developers are really looking to see how fast they can sell the product rather than creating wealth, and that the buyers are more often speculators than people who live in it, because there's a demographic disconnect between the people who can afford to live somewhere and using housing as an investment vehicle. The cost of that speculation is it drives land cost up, it drives housing cost up. You have no production of affordable housing, decreased occupancy in the CBD districts, failure to produce social infrastructure, and you have the total issue, again, municipal reliance on land sales. There have been a number of corrections since 1996, and a number especially in 2008 and 2009, to try to adjust these. One of our speakers before, Patrick Chavanik, has listed in one of his blogs that every time it goes down and the government succeeds, it lasts about 3 months before the housing prices shoot back up, because there's so much optimism and that the buyers see the prices going low, they think they'll make money going back up, and they start buying again. Examples, these are the typical Soho project in Beijing, or the MoMA building. Terrible construction, no maintenance, nobody there who buys those lives there. They're all rented out to expats, but they're all investment vehicles for the local people who buy them. The other example, there's 64 million vacant apartments in China right now. They are in China, these are examples of Chinese ghost cities, Zhengzhou and Erhat. Zhengzhou is the largest. The one that's most famous, obviously, is Erdos. To be fair about Erdos, it's 50% occupied now, after getting bad press for about 10 years. Okay, and this one in Kunming, which will probably fill in because the climate in Kunming is quite nice. Retail marketability, we do a lot of retail consulting. Our vision has always been that the high-end malls, China World being a good example, it's the oldest. You've got a limited number of consumers. At one of the malls that we were involved with, Joy City, it's designed, the marketing of it is designed that people, the local people can buy there. Instead of Gucci or Louis Vuitton, our anchors were Zara and H&M. It's the most popular place for people under 30 in Beijing. And
2 minutes, please.
Pardon?
You have 2 minutes.
2 minutes? Okay, then I'm going to have to speed up. So I believe in affordable luxury. This is a totally empty mall where Louis Vuitton was paid $6 million. Nobody goes there. Okay, same situation with them. I'm going to get to a couple of other things. The items that were in the plenary section on that we've been discussing today, the 5 that are inside the red line all relate to housing and intelligent development, and all have the potential to do that. The 6th one that could relate to that is SOEs. The SOEs currently have a huge amount of real estate, both land and buildings, that are non-performing. And they're kept off the market because they don't have to perform, because they're in a portfolio that was bought by value and nothing else. Legislative opportunities, taxes, VAT taxes, taxes on second homes, property tax. 1% is the normal in the US, or 0.095. They did that, the municipalities could run themselves. Okay? One of the corrections people have tried, China just built 2 million houses at 250,000 each in Angola, which we don't know why. They're building a $4 billion resort next to Atlantis in the Bahamas. But each one of those moved 10,000 workers to a different place with a lot of material. Opportunities for reform or geographic diversity, social housing, demographically sensitive retail, and tourism. All of those which are items that are also in the plenary session. Geographic diversity, doing an appropriate luxury development in a city like Hohhot, or a resort development outside of Beijing in a place called Yonglidian.
Could you wrap up, please?
Sure. Housing marketability, same issue. Expensive housing is great if you're renting to expats. You can have lots of housing that is financially appropriate to the marketplace that it's in. Some experiments that have done well are relocation housing in Beijing from the southeast ring road, from the second ring road to the fifth, where an exurb called Daqing has been created that's quite successful. I can't go through these at the time, but the State Housing Committee in March came out with 5 points for affordable housing. There's a lot of land marked for affordable housing coming up. And as an indicator, the percentage of affordable housing is going up at a much higher rate than luxury housing. Similar with retail development in affordable places. This is typical of a new mall in Hebei in a town of 350,000 people that has no retail. The developer who's doing this is planning 200 of them in cities like that. And these people will now have retail that makes sense. Brand development throughout, we're not getting into that. Logistics is another issue. The reason that you are able to, that China Post is able to create retail stores that nobody else can do is because they can control the logistics. There's no distribution of products that makes any sense yet. Cultural tourism, which we've been very involved with, involves creating opportunities in special places for families to go, and recreational tourism, which we think is a big deal. And I'm sorry I ran too long.